Welcome back to the Knowledge Hub podcast. Here's a stat that should make every finance leader sit up. The best accounting teams process an invoice in 3 days for less than $3. Everyone else, 17 days at nearly $13 per invoice. That's not a small gap. That's the difference between a finance team that runs lean and one that's drowning in paperwork. So, what's eating up all that time? It's not the big decisions, it's the messy middle. Opening PDFs, retyping vendor names, chasing approvals through email, fixing tax codes that don't match. In 2024, manual data entry still accounted for 60% of invoice work. Some accounts payable teams spent more than 10 hours a week just typing numbers into systems. That's where Invoice AI steps in, and it's becoming especially powerful inside platforms like Odoo. Here's what actually changes. First, the grunt work disappears. Invoice AI reads supplier bills, PDFs, scanned documents, whatever, and turns them into structured data. Vendor details, line items, tax amounts, all pre-filled. You're not eliminating humans from the process. You're eliminating the part where humans act like expensive scanners. The team focuses on exceptions, not data entry. Second, the system gets smarter about matching. When you link invoices to purchase orders, Odoo can automatically check quantities, pricing, and tax details. If something's off, a price mismatch, a missing PO, it flags the variance and routes it to the right person. No more hunting through spreadsheets trying to figure out why the numbers don't line up. Exception handling becomes a defined path, not a guessing game. Third, approvals actually move. We've all seen invoices stuck in limbo because nobody's sure whose inbox they're in. Automation makes the next step obvious. It pushes items to the right approver based on rules you set, spending thresholds, departments, whatever your controls require. Faster decisions, cleaner audit trails, and finance stays in control. The interesting part is this isn't about replacing judgment, it's about protecting it. When your team isn't buried in repetitive tasks, they can actually spot the invoices that need attention, the unusual amounts, the duplicate vendors, the coding errors that would mess up your reports. Clean data from the start means fewer surprises at month end and a close process that doesn't depend on last-minute heroics. One more thing worth noting, this works best when the basics are clean. Consistent vendor records, clear tax rules, analytic tags that people actually use. Automation amplifies what's already there. If your chart of accounts is a mess, AI will just process the mess faster. But when the foundation is solid, the time savings show up fast. In cycle time, in cost per invoice, and in how predictable your close becomes. If your finance team is still spending hours every week on manual invoice work, you're not behind the curve. You're exactly where most teams are. The question is whether you're ready to change that. Until next time, keep building smart.